So everybody, thank you so much to join our webinar here that Keith, Kohler, and myself are putting on. Accountfully is hosting. As you can see, and as there's been a ton of information that has been pushed out to the world in relation to SBA loans, navigating kind of the SBA loan process, disaster recovery loans, the new paycheck loan process, or the payback loan process within the stimulus package. There's a ton of information at the heart here, and Accountfully is very excited to have Keith Kohler here on the call and the webinar, who's going to be leading kind of the information sharing here along the way. So without further ado, I'm going to introduce Keith. He basically, his entire career, since I've known him, he's basically a debt financing consultant. So he has worked a ton with SBA loans, identifying the proper course of action of what type of loan your business can get at the various ventures or junctures of your business, as well as helping you kind of customize and clients customize to ensure that they have the proper documentation, understand the amount of money to apply for, etc. So with all these new SBA packages and all the situations since the coronavirus has come under play, Keith is actually the best person I know to kind of tackle all this information and to really help, get it down to help each one of you on this call understand of kind of course of actions and what next steps are for your particular business. So I'm going to pass it off to Keith in a second. With all that being said, if you guys have any questions or comments, feel free to put in the chat function and things like that. I will moderate as we go forward and ask questions along the way to Keith as things come up, because there's going to be a ton of questions. We may not get to them all. With that being said, we will consolidate them and do a kind of a documented share and respond to those as much as we can. So without further ado, go ahead, Keith.
Next slide. Yeah. Hey, I just wanted to start out by saying hello to everyone and greet you with a bit of a reflection. Probably all of us are using these emojis more than ever, or we've seen them in our social channels. And I think it's just a time to really think about our blessings and to be grateful. The original spirit of these Japanese emojis are please and thank you. So I know all of us are doing our best through these challenging times. We're being there for ourselves, for others, our families, and our communities. And as business owners, you have to continue to do that. You have to be there for your employees and others. So all of us are in the spirit of service and of contribution. And I think for me, my contribution is to do the best I can to leverage my years of experience, my insights in underwriting, my network of lenders and SBA folks to put that information best of service for you and tell you how you can apply it to your particular business and have the best chance of getting the right funding. And of course, that funding doesn't mean just the SBA new programs. It means funding in general now and into the short term and into the longer term. Okay, next. So Accountfully and Brad and I have prepared this presentation for you, and this is what we'll go through. You can just take a quick scan at that lightly, and that's the general agenda and what we'll be going through today. Next. Okay, so who am I? Brad, thank you for that nice introduction. And I'd love for you all to connect with me on LinkedIn. There's my profile there. And I created a new email for these times and for these purposes, which is assessment@K2 Financing. And as Brad indicated at the top of the call, I'm a financing strategist, advisor, and debt financing expert. And I've been doing this for several years. I started out in Fortune 500 companies, and I worked as consultant in business development and sales and marketing, all the different types of roles that all of you master in your daily businesses. But my specialty is food and beverage, CPG, and manufacturing. That's where I have the most of my clients in both financing and advisory. And then there are just some other things that I participate in down there. Next. Okay, so what have I done today to prepare for today? Well, it's been a very dynamic situation and things are literally changing by the minute. In fact, I got some updates just within the last hour. So I'm telling you, everything I'm presenting here is up to the date and current and reflects my best thinking up to about 4 minutes ago, but that could keep changing even as we go through this. So please bear with me and we'll do our best to give you all that we can. So what have I done? I attended multiple sessions, training sessions that the SBA had offered. Some of them you've seen on a national level, some of them have been hosted by your local district offices. Make sure you're plugged into them. Those are excellent resources of up-to-the-date information. I've spoken with banks of all size, really the large banner banks that like Chase, B of A, Wells, et cetera, and the small community banks. They're all throughout Florida. And then, like a lot of you, my inbox has been flooded with tons and tons of summaries and white papers and position papers and points of view. And here's what you should do from all these different types of sources. All the service providers and the finance community, I think, are really stepping up because we want to give you actionable information that you can work with. The other thing is for consultants and service providers, make sure you reach out to them because they'll be providing their viewpoint and probably best counsel you on how to go ahead right now. So Brad and Claire have already submitted to me some of the questions that you had up front. Where possible, I've tried to incorporate them. And as Brad said, I'll do my best to respond to them in a written form as soon as I can, okay? So all of this is continuous, it's flowing, it's rolling, and I'll do my best to stay on top of it. And when we have updates, Brad and I will reach out to you with things that we think are important, but not until we're sure. And
yeah, and some of the questions that have been provided, we actually don't have answers for yet because proper guidance has not been given. So just an FYI for everybody, as Keith said, this is a very dynamic situation on hand. Go ahead, Keith.
Okay, thanks so much. Next slide. So what's going on in today's lending landscape? And probably many of you have seen that some banks are not lending anymore right now. They might have a full type of shutdown, whether it's conventional or SBA lending. Some traditional programs are gone from the banks themselves, but SBA traditional programs are still in place. So if you have a 7A, if you're applying for a 504, the other two types are still available in the marketplace. Non-bank lenders, AR and inventory, fintech, others are telling me that they're staying the course, and some of them are providing more capital because indeed traditional bank lending might not be available to you right now. However, if you're in a process, if you were thinking about lending, I encourage you to stay in close touch because what they might be telling you today might be a different story tomorrow because it's not often their decisions about how they'll approach these markets, okay? If you are an essential industry, if you're operating at full strength, you should be making the case for getting your lending because you should not be experiencing a lot of economic injury. If you are, you'll be able to demonstrate that, and that's the purpose of these other loans, okay? Next one. Okay, so what should you do now? Like really right now? And I think the thing is you want to get prepared because as you're making your case and you're presenting to banks or other folks, you want to have everything updated and showing your very best. So I require you really, if I can be so bold, finalize your 2019 year-end financials if you have not already done it. Those are the ones that are key for you. The P&L, balance sheet, debt schedule, AR, have those updated and make sure you fully understand them, that you can explain them on your own to any banker or any underwriter. I want you to work on, please, your interim financial statements. That's really, really critical. So try to get them done through March 2020 as soon as possible and make sure you understand every month. Understand January, February, March, particularly if and when the point you started showing economic injury. And I'm going to be using my little entre aspas, the quotation signs to say that because some of these terms are so vague and they still need definition by the SBA and your bank that it's going to be more defined as we move through the processes, okay? If your 2019 business tax return is not filed, and that's probably a good percentage of you, make sure you get very, very intimately familiar with your 18 tax return, and I'll come back to that. Make sure you have no liens on your business. You know, if you haven't paid your payroll taxes or any other sales taxes, you've got to clear those. That needs to be a priority because no one's going to lend to you if you have liens on your assets in your business side, okay? Get all your banking and loan statements put together, both on the business and the personal side. Remember, you're going to be filling out a personal financial statement, and that requires an in-depth knowledge of all the different products that you have personally. So all your banking statements, 401ks and IRAs. And I want you to start keeping a very good file, please, on your computer, whether it's paper, whether it's electronic, about what economic injury means to you. And I'd encourage you to start thinking about from the beginning of the year, from January 1st, even though for the majority of us, probably nothing really significantly hit until maybe mid-February to early March. Okay, next.
Hey Keith, one question is in terms of the personal statements, like if you, we have many clients that are C Corps, many clients that are multiple owners, what kind of percentage of who will have to provide personal financial statements for these loans? Okay,
that's a good question. And it speaks to on the EIDL loans, where you're providing all the information on your owners and your affiliates, my belief is, and I'll reconfirm that with you, that everyone has to have a full file. It's not just the tax returns, it's also the personal financial statements. So for those, for your companies where they have 20% ownership or higher, you should be expected to file that. But again, I'll reconfirm that for everyone.
Okay, thank you.
Okay, next, please. And then I'm gonna be a bit more emphatic and say, beyond what you wanna do now, what should you really do right now? Okay, if any of you are in the process of getting any type of lending from your bank, a line of credit, a term loan, equipment lending, or if you're working on SBA lending, the time to get that file done is right now. Here's why. If your 19 was strong and 2020 is banging so far, and I hope it was, and I hope it will continue, but if you're gonna demonstrate any economic injury into the future, and if you're expecting a downturn, the farther you go out into the future, the banks have to ask for your financial statements, because statements, interim statements go through a 90-day period. So the further you get out, if you're starting to show losses or have significant reductions, it could threaten this application. All right, right now, please, and this was not usually my case before, but check your business credit score. Now, I'm not an expert in business credit scores, so I myself went to Credit Karma. I found an article and they suggested these sources in order to check your business credit score. I've not been on them. I'm not highly familiar with them, but perhaps you can do your own independent research and see. I know that business credit scores are used by some banks, not all, in a traditional lending environment. But in this particular lending environment, you just want to make sure you have no marks against you. Many of you might not have significant history with your business credit, but that's something you can look up and then you can act upon it, okay? It's important to have what I'm calling a bankable credit score. In traditional times, 680 is considered an acceptable minimum credit score. I've seen 650 in other settings, particularly if a file is very strong, but think about 680. And that's not just you, that's for all your other owners that have 20% or more, okay? So this is the time for everybody to be open book and being very honest. All of your owners really need to tell you where they are personally and in their contributions to the business, okay? If there are issues, you have late payments in the last 12 months, you have any big issues like bankruptcies or short sales, all of those will have to be explained. I'm encouraging you to be in very close touch with your bankers and understand exactly what they're requiring from you right now, both in your operating business, your reporting requirements, and anything you're about to pursue. Also your investors, because your investors, if banks have dried up or if you don't qualify for these loans, where are you going to go for money? Maybe it's your investors that will need to step up and think about what they can do for you, okay? So the other thing too is understand the financial status of all your vendors. You need to know about your business continuity. That's very important as well. And also, where would you call in for favors? Again, if you have no other resources. Again, this is general advice that goes beyond the scope of the SBA loans, but it's critical when you think about moving forward and what you're going to need in order to make your case or to demonstrate injury or to think about your financing options, okay? And the last couple things here, continually update your cash flow model. You as account-fully clients, I really encourage you to look 12 months into the future. That's not just a good operational sound advice, it's advice that I'm hearing from my SBA contacts, because that's the relevant time period for you to think about how long economic injury is going to last for you. Okay, we'll come back to that. And then the corollary of that is plan for this disruption to last fully a year from now, all the way through Q1 2021. Okay, so that's your planning horizon and your relevant time horizon for any good documents you submit. Next.
Yeah, and just to be clear on some questions flowing in, this is related to kind of traditional SBA loans and how the whole SBA loan process works in general. We are going to be specific about the two new kind of programs here, the EIDL and the PPP soon, but we want to kind of start with a high level. So we're getting to all of that.
And it's setting the stage for you to be prepared to understand really where you are now and where you're going to be in the future, because your forward cash flow is very relevant to this discussion. Okay, so here's an overview of the traditional. Many of you have done this or you've looked at it. Hopefully you've closed on it. And if not, or you were thinking about it. So the breaking news, and this came to me over the weekend and I reconfirmed it just, 20 minutes before the call. But I encourage you to check with your own bank. If you have an SBA loan and you have it with whatever bank you have it with, this is what I've been told by Pilot Bank which is a bank I've closed business with in Florida. The SBA will make 6 months of payments on all current SBA loans or new loans booked within the next 6 months. That's supposed to go for both 7A and 504. Please, please, please check that with the bank with whom you have an SBA loan if you have one active right now. You can do that with the banker or with the customers, the loan servicing department, okay? Remember, in traditional loans, the bank is the lender, the SBA is the guarantor. So even if you're going down this path already with SBA loans, it still has to work for the banker and the bank. So if their credit box has changed in any way, they won't accept lower credit scores like they did before. They're unforgiving of late payments, or they need higher debt service coverage or ability to prove that you can pay back the loan. All of that might have changed. So think of if banks were lending in a larger credit box like this, more likely than not, it's a tinier one now. So only the best deals are getting done and the strongest deals, okay? So like I'm saying, stay in constant communication with your commercial banker and in many cases, your loan officer. Okay, next. Okay, here's a good summary chart, all right? And I got this from a banker locally. Interestingly enough, he said, Keith, don't credit the bank, just please make it of service to others. So here was a chart that I got here from someone locally in South Florida. And this is a good summary. It was current as of March 27th. And again, you're gonna hear me saying that a lot because keep abreast of what's going on. Read your emails. Thoroughly look at SBA sites, at banking sites, whatever you got. But this is a good summary to jump up on our conversation. And I'm going to focus on the first two categories because that's where the depth of the discussion really should go, because that's where you're having probably the most questions and confusion, and also where we can add the most insights, because the EIDL loan in the middle column has been out for a while, a couple of weeks. And probably actually many of you have already applied, or you've looked at the application, you're wondering, what might be the insights? How could I best improve my chances? Paycheck Protection Program, as you all know, the legislation was passed late Thursday night into Friday morning, exactly where that is right now. Many of you might have gotten some notifications from your bank. Hey, this is how we're thinking about doing it. These are the provisions that are in the bill, which is 880 pages long. This is how we understand it right now. As I understand it, based on my conversations with my SBA contacts, the legislation has been done. It's in the hands of the SBA now to say, what are we going to do? How are we going to change our standard operating procedures? How will we interpret some of the parts that were passed, and how will we make that relevant for the banks? And once we have that relevant and we understand how we advise the banks will then be able to tell you how to apply and how it's particularly relevant in your case. So right now, we're just making our way through the process, and the PPP is going to be available in full and understood for you probably sometime this week and hopefully very soon, because it's an excellent program and probably nearly all of you can work on this, okay? So I think this is, again, a really good slide. Screen capture this, do whatever you need to do. It's something good to have handy. I'll just go through the highlights here. And what I really wanted, this information is widely available. So I'm going to spend less time on what it is versus how I think you should look at it and how you should act upon it right now. Okay. So let's look at the PPP column, since that's the fresh news. And there we go. What's the maximum loan amount? 2 times payroll costs, capped at 100K per employee, maximum of 10 million per borrower. May you approach that maximum of 10 million. All of us are probably small business owners on this call, but 2.5 times monthly payroll cost. That's for a rolling 12-month period in the past. And for any employee that earns over $100,000, that person is capped at $100,000, all right? The eligible borrowers, again, that's probably all of you here, unless some of you are pretty sizable middle-sized businesses. The use of proceeds, okay? You can see their payroll, and then all these other uses, interest on mortgage payments, rent, utilities. I'm going to go into a little bit more of that when we dive in further. Collateral and PG. PG is for personal guarantee. It's not just a movie rating, but personal guarantee. The collateral for this program and the PG is waived, okay? That's a really important consideration for many of you. It kind of goes back to that earlier question about C Corps and things like that, and 20% and affiliates and all that stuff. Without them having a personal guarantee, those of you who are funded by your venture capital firms and have significant investors that might have over 20%, this is a godsend for them. Okay, don't worry too much about affiliation. The other key thing here is credit elsewhere is waived. What does that mean? If you're an owner and very fortunately you have good personal assets, an example might be you have $50,000 in cash right now, you have $1 million in your IRAs, things like that, okay? Or other liquid investments like savings or additional checking accounts. In normal banking, a credit elsewhere means, let's say you're applying for a $50,000 loan, but you have $50,000 or $100,000 of cash. Someone might say, well, no, he has credit elsewhere. He can fund that loan right now. So why would I give him the money? That's the concept. And credit elsewhere is being waived right now. So that's really a critical thing. And I think a big breakthrough for a lot of you. You know, your personal wealth is not going to get in the way of you doing something for your business right now. The forgiveness, we'll talk about that in a little bit. Yes, you've heard it is forgivable up to 100%. And then you can see down there the interest rate and the term. Okay, 4% for the non-forgiven portion, 10 years. Let's go to the EIDL for a minute. Up to $2 million, you can see down below 3.75% interest rate, up to 30 years. Now you can request any term that you want. You can say, I want to do it 5, I want to do it 10, 15, 20, okay? And that's kind of the part of how I would help you figure out and how much you would be asking for to figure out how you can pay it back and what's the right term for you. Going back up to the top, eligible borrowers, very much the same. Use of proceeds. Now, you'll notice in the two columns, very, very similar, right? You're seeing payroll, rent, utilities, all that stuff, interest on debt incurred. Here's the most important thing for you. And I think, Brad, I think you put it in the chat about being able to apply for both loans, right?
Yep.
Yeah, there you go. So all of you can apply for both. You can do both. The key thing is in use of proceeds, you can't use the money for both uses of proceeds. An example would be PPP, obviously because of the name, it makes sense for that to be the one where you're requesting help with your payroll, right? And that's probably where you're going to be focusing your efforts. On the EIDL, you might say, okay, I want to use that to focus on my rent, utilities, interest, and debt service. So you just can't use both for both. You can't double dip. All right, so that's an important thing as you prepare for these. But you can absolutely apply for both. You know they go through different channels. The disaster loan is through the SBA. It's their underwriting. It's their disbursement. Your PPP is through your local deposit bank. Okay, so those are just a good summary of the program to go back to again and again. If there are better and new summaries that have more, that have better information, have updated information, I'll be sure to provide it to Brad and we'll get it out to you. Okay, next.
Quick question, Keith. Is payroll on the PPP program, does that include 1099 contractors?
Question. My understanding of that is yes, if they're essential to the business. And again, I have that question myself with my SBA contact. So I'm going to reconfirm that for you. At first, you know, they always start with W-2 because that's strictly on your payroll. It's easy on your payroll reports, but I believe 1099 is covered and we'll confirm that.
Great.
Okay. Okay, next, please. Okay, so here are my most important insights, and some of them we've already been through as we've made our way through the charts. So you can apply to all, including that grant, okay? Don't forget that grant. It's just I didn't have time to really cover this fully here. What's the purpose of these loans? This is about paying your expenses and maintaining jobs. This is not to be used for growth. You can't use it for construction, buying real estate, getting into new trade accounts. It's to protect the downside. And these are loans. These are still loans. So your credit worthiness counts. Lower credit scores are having a harder time getting approvals, but they are acceptable for EIDL right now. In one of my conversations with an SBA loan officer, when they implemented a disaster program in Puerto Rico, they started out with a certain minimum credit score, and then over time it dropped. And he mentioned something in 600s dropping to middle 500s or so. That's rare and unusual. We can't plan for that, but at least if you have a lower credit score, if you have issues, as long as you're explaining them, EIDL is a place where there's a lot of leeway for you to talk about it. Yeah, the other key thing, again, it's a loan. You have to be able to demonstrate ability to pay back, and it can be done in multiple ways, right? This is an extensive discussion, but I'll try to summarize it quickly. One is the business itself. Business itself is profitable, slam dunk. You can prove you can pay it back depending upon your other debt obligations. If it's profitable so far in 2020, okay, you don't have it on a tax return, but you're showing something. If it's profitable into the future based on projections, maybe there too. So there's multiple ways to go about this, and these programs are allowing for that. Okay. The last thing to tell you is if your business itself doesn't do it, but your affiliate businesses or your personal life, meaning your husband, wife, spouse, partner, anything has additional income and they have a W-2 and that's solid, that might be a source of repayment too. So again, I know that's very broad, but just think of every other way that you can pay a loan beyond your current business. As I said, EIDL is administered by the SBA, PPP by your deposit bank. Okay, really critical, not where you get the loan, but where you have the deposit. So be in touch with the banks that hold your deposits. As I mentioned, PPP will probably be live this week, as early as this week. This is what my SBA contacts are telling me. It might take longer. Remember, SBA has to determine first how it's relevant for their SOPs, and then they will communicate to the banks, and then the banks have to tell how they're going to roll it out to their customers. So again, be in touch with your banks. I'd like you to think about whatever you do here, as this is one of the more important applications in your life. This is for your dream job or your top choice of college. So treat it with that. Make sure it's complete, accurate, and you have to document and substantiate everything, especially, and there it is again, economic injury, which is not a perfectly defined term. Okay, next.
And this is Brad. One thing I will say as we chime in here, just for people to have proper context of each of these loans, right? The PPP payback program is a short-term support to get you from here over the next 8 weeks, right? Or whenever you get that loan. So look at that as short-term. A lot of people are focusing on getting the PPP loan and then getting that loan forgiven. We're going to get more into that. But the overall economic impact of this situation, who knows how long it's going to take, is going to be a long-term event to your business. So you also need to understand and look at it from that perspective. Don't just look at it from a PPP, how do I get a loan and then get it forgiven? Well, then how are you going to operate in August, September, October and afterwards? So again, understanding both contexts and understanding the specific needs of your business along the way will help that aspect. Go ahead, Keith.
Thank you, Brad. That's a great comment. And again, that points back to the need to why you must be looking out over this horizon, right, of at least 12 months. So the Payroll Protection Plan, PPP, since this is new, instead of being able, I wanted to reach out to a bank source that I trust, again, Pilot Bank I'm using in this particular case, to say, well, how are you planning to execute upon it? What insights can I offer to people? And again, your bank is going to have their own way of doing it. So I'm offering you not necessarily what the program is, but an illustration of how banks are reaching out to people. And this is what they're asking for. They're asking for your company tax return, your year-end financials. Boom. Hopefully you have it done. And if you haven't, here's a reason why. Your payroll tax forms, your IRS Form 941. Verification, right, of all the employees over the recent 12-month period. And they're asking for a good faith certification. This is important. With the volume of lending that's going on in these extraordinary times, bankers usually do site visits. They usually come and inspect assets. That's not going to happen, right? So this is about good faith. And they're asking you to represent whenever what they might have you sign, that you're going to use it for the right use of proceeds, right? That these ones that are authorized. And that's very, very important. And it goes back to not receiving duplicative funds for the same uses from another SBA program. Okay, next slide. Okay, so what are some key plan insights? As you saw, 2.5 times average monthly payroll. So for our purposes, and I got this from a local banker here, he's saying, look at your 12-month rolling average. So if you were applying today, right, it would be 12 months backwards from today. Whenever you're sending your application in or whenever you have reports for, that's your backwards 12-month period that you should take a look at. This same banker from a big bank said it can possibly include commissions and benefits, all right, your 401k, medical insurance, et cetera. Still confirming that, still making sure that's accurate, and we'll get back to you on that. Interest on any debt. This is such a broad one. And this particular banker read the bill himself because he's a legislative expert, and even he doesn't know what debt really means yet. This is big for all of you because probably all of you have some mix of what I'm listing here, whether it's your credit cards or your lines of credit, your term loans, your equipment loans. And for a lot of you that have taken investment capital, you have convertible notes, right? And maybe you're paying out interest on that or you're accruing interest. So all I would say, my advice to you is whatever you have on your debt stack, whether it's short-term, long-term, or you're putting it in equity, but it's essentially a debt instrument right now, assemble all that information and be sure of what your commitments are now into the future, okay? And also looking backwards a little bit. And then you see all the other ones down here that are eligible. This plan does include sole proprietors and contractors. I'm getting more information on that. Probably many of you are service providers or consultants, and you're wondering, well, you know, I thought it was just for people who have W-2 employees or 1099. What's in it for me, or how do I do this? I'll get you more information on that too. But again, check with your bank on how they handle that. If you have a hospitality business and you have multiple locations, each individual location may apply for this. It's not just company-wide. And the last thing is, if you're already applying for a 7A loan, you cannot do this, okay? So the 7A loan presumably would have gotten you the financing you need to handle this. If the PPP is a better option for you, you'd have to cancel the other process and move on to this. Okay, next one, please. Okay, last quick thing. And again, this is still being developed and breaking news. So this is my best thinking from that banker I told you about. He's saying that to qualify for loan forgiveness, here you go, by June 30th, that's going to be quite a day. You have to rehire any terminated employee at least 75% of former salary. Let's use an easy example, right? If you had a former employee that you had to terminate at $100,000 a year, you must rehire her or him at $75,000 by June 30th. His concern and his question, still to be answered for all of us, is how are you going to prove that? Is it canceled checks? Is it payroll reports? What's going to be the proof and documentation you must provide? The last thing, going back to Pilot Bank, is they're putting in their emails out to their customers that this is all subject to credit approval. Well, what does that mean? Okay, we're back to that same nebulousness, right? So credit approval could mean anything. Is it a low credit score? Is it a high credit score? Can they handle any issues? Again, how big is that credit box, or how narrow is it depending upon your bank? And that's the discussion you want to have up front with your banker. Okay, next.
This kind of wrapped up the detail of the PPP, a couple specific questions that we can just get into it on this, Keith. So number one context is that the PPP was the plan that was passed on Friday as part of the stimulus package, part of the CARES package.
That's
Again,
correct.
this is going to be administered through your local banks or any bank that you use, whether it's a deposit bank or any bank, right? It's going to be administered through the bank. The EIDL is administered through the SBA's website, which we'll get to. So there's two separate situations there.
That's exactly.
From the PPP, a couple questions for you, Keith. From a loan forgiven standpoint, the loan is forgiven. Is that a taxable event, or do you have any other details on that?
I don't yet, and I think that's what's being worked through now through the SBA. And so, let's keep that question, and I'll get it answered for us. I don't know if we can answer that today or if it's further down the line, but we'll get to it for sure.
And how does an owner's payroll factor into the PPP, whether they take W-2, whether they don't take any money, and whether they take draws?
My understanding is that owners qualify for this and they ought to be included in it, but I don't know if it's the full categories yet, right? Everybody starts with W-2 in the discussion. So what's relevant in 1099 income for you and what's relevant on distribution income for you, we'll try to get that addressed as soon as possible.
What about, is payroll considered to be double counted if we use PPP for the first 8 weeks and EIDL for payroll weeks 9 through afterwards?
Great question. And I think the answer should be no, right? Because you can't use the same money for the same use. So if you're using PPP for one period, you're using EIDL further down the line, you're not applying the money during the same period and double counting, to my mind. Okay.
Yeah. And then just to be specific, obviously a lot of this information, PPP, is related to W-2 payroll. And a lot of you on the call, as well as our clients, are contract workers, as Keith was saying. You're a 1065 that takes draws as your compensation. That's a lot of gray right now. So that's where we don't know the answer to it, although it says that this is available for you, but we just can't really provide any more context in that discussion for now.
Yeah, but like we said, we'll do our best to get you all the information we can, okay? Once we know that it's real and we can verify it.
All right, next one, EIDL, go ahead.
Okay, so EIDL, there's more information here because it's been out longer, right? So it's already been through several iterations, and probably any of you have seen it's changed over several times, and we'll talk about some of those changes. But here's an overview for you. So eligibility is really you and anybody in your supply chain. So the manufacturer, the wholesaler, the retailer. And the key phrase that's in the SBA literature is you must have suffered working capital losses due to the declared disaster, right? You have to prove, again, here we go, economic injury, specifically from things related to coronavirus, right? If you had something independent of this happen to your business, like God forbid, a fire or something like that, that wouldn't not be relevant for this application process. That would be something different. Okay. My simple rule to you is please compare before and after. If you've already done your cash flow projections or your P&L projections for 2020, you probably have a baseline of, for example, what March would have been, right? And then if March is coming in somewhere below and you can tie that back to coronavirus, then bingo, that's your starting point for demonstrating economic injury. And you can say that was my loss as a result of the declared disaster. So I encourage you to just use your before and after and look at your financials probably again since the beginning of the year. Now, on a recent SBA training I was on, the credit history said, satisfactory to the SBA. Well, that makes like someone like me pull out the last remaining hairs I have and wonder, what does this really mean? And it's hard to say. So I checked in again with my top SBA contact yesterday, and she recommended, Keith, so far for the loans that I'm seeing being approved, around a 620, maybe as low as a 600 is considered satisfactory right now. Again, my contact that worked Puerto Rico said it could go down over time. So again, I'll do all I can to give you the up to the minute on that, but it's still true. It's credit history. If you have issues, if you have late payments, if you have anything that's been a problem in your past, you still need to explain that and get ahead of that rather than someone asking you to provide information. And again, EIDL, you have to be able to show repayment, again, just like any other loan. So here's the phrase that came from the training. SBA must determine that the applicant business has the ability to repay the SBA loan. Well, here we go, perfect vagueness once again. But in classic underwriting, the ability to repay is based on the business itself, not the affiliate entities or not your personal life, just the business itself saying, can you repay? So how would you know best if you can repay? If you were profitable on the last tax return that you filed, whether it's 2019 or 2018 is the starting point for that. And the clients that I'm advising, I'm looking at all those different things between 18 and 19 and interims and future, because all of those can be relevant in the discussion to talk about repayment ability. But the starting point is your tax return. So, look at your 18 tax return. If you haven't filed 19, but it's going to be profitable, 18 wasn't, 19 is, 19 is where it's at. That's going to give you your best shot to get the loan amount you're requesting. Okay. Collateral, none required for loans up to $25,000. Maybe for a lot of you on this call, $25,000 is all you really need. And if that's your cash requirements or what you think you need for the next 12 months, stop, don't do anything further, go for that 25 because you don't have to worry about collateral, okay? Above that amount, you have to pledge collateral. Now, business and personal. Business assets include, your inventory, your equipment. They put UCC liens on your business assets, but they put it in the best available position. So if you have lending right now, if you have an SBA loan or a line of credit or something that has first position or second position on your assets, the SBA will take the best available position. They'll go to position number 10 if they have to go there, but they're going to put a lien, all right? Personal assets, have that conversation in your household. Are you willing to pledge the equity on your home if you have it to substantiate this loan and to collateralize it fully, okay? Next one.
All right.
Okay, so these were the filing requirements as of March 27th. I just got notification that there's a streamlined application. So hopefully most of this or all of this is still relevant. But again, I'll provide you some updates if we can, okay? So these were the filing requirements. I encourage you to have all your documents handy. What I mean by your documents, the things that I said at the top of the presentation, your business and your personal ones. As of March 27th, last Friday, the drag and drop feature is new. You can email your document, your loan, disasterloans@sba.gov. An important tip, nothing larger than 5 megabytes. I know throughout our history, Brad, you probably see, right, some tax returns can be 14, 15 megs, right? Mm-hmm. Make sure you all save it to be smaller than that. You can even fax it. If fax is your thing, or if you scan a document, you e-fax, that's the number there. Once a loan is submitted, or if you've already submitted your loan and you want to send in new information, which I'll get to in a minute, this is what you need to do, disaster customer service at sba.gov. If you're reaching out to them, put your case number or your loan number, put your company name, and just make sure you reference anything that you've submitted prior. And if you're doing additional materials, hey, I want to submit this, I have updated financials, I have a new narrative, which I'm going to get to in a minute, or other information that's relevant to my file, okay? Such as like a big improved credit score, something that makes your case stronger. Okay, next one. All right, so here are some insights based on my conversation with the SBA and the trainings I attended. So why are applications getting declined? The number one is incomplete files. You didn't fill out that one box on that one form, and it's super nitpicky, and I'm sorry, y'all, but please, you have to go through every form, check it and recheck it again. Maybe get someone else in your office or in your business or at home to check it with you. There's no signature in the key boxes. It has to be signed everywhere that's requiring a signature. And this is a big one that I didn't expect. A lot of people are submitting without their partner's name and information being put on there. Remember, it's 20%, 20, there we go, 20% and above, they have to be listed. One of the applications only has room for 2 partners. Some of you might have multiple people that are above 20%. All of their forms have to be submitted, all of their 4506Ts, all of their supporting documentation. So as of today, those are the 3 major reasons why there are issues, and it just creates delays in the processing. It's kind of like, here I was, I'm ready to go. Now, you're not complete, back to the bottom of the queue you go. And I'm sorry for that, but again, check your work. Bad credit is still bad credit. As I said, 620 seems to be the lowest acceptable at this point. It could go lower. Common pitfalls by document. This is my interpretation of the documentation that was part of the application process that was good until this morning. I hope it's still good, but these are the problems I usually see with these documents. One of the things I'll be doing hopefully tonight is creating some videos about how to best go through these documents and make sure you avoid the common pitfalls that I see, not just in these loans, but throughout time that I've worked on these loans. And I hope that'll be helpful for you. The core application, there's a couple things. Name, any place you put your name, you should, in your company name, it should be exactly the same as it is on your tax return. So Brad, how is Accountfully, what's the full name of the company?
Accountfully LLC.
Right, there you go. Everywhere on your application, it's Accountfully LLC, right? It's not just Accountfully, it's not a DBA name unless they're asking for it in that space. So, if you say incorporated, make it all incorporated. If it's Inc., INC, whatever it is, make sure it's exactly right. If it's PA, if the comma is there, comma, P period, A period, if it's not, it just has to jive. Otherwise, people freak out. Same on your personal tax returns, right? There's a middle initial, include your middle initial. If your spouse is on there and has a different name and they changed it this year, but the last tax return said a different name, use the one on the last tax return, all right? Section 21 tells if anyone helped you fill out that application, you have to put their name there and tell them how much you agreed to pay them, okay? Y'all, there's a lot of scamming going on out there with people saying, oh, I can fill out the application for you and I'm gonna charge you X% of the proceeds once you get it. Well, guess what? Not supposed to be done, all right? There are some strict regulations on quote unquote traditional broker compensation and how people can be paid. So you have to be very careful if anyone's offering to help you. The truth is you should be doing this on your own. So that's how I'm trying to be supportive of you, is helping you with the tools and the thinking about how you should do it. And the way I'm working with my clients is completely in these areas on an advisory basis and a consulting basis. I don't work on, for these things, on a percentage of successful outcomes and funding amounts, all right? So there are the rest of the ones. 4506T, probably a lot of you have done it. It's your tax transcript request. Make sure you sign and date at the bottom. Tax returns, sign and date, and you provide all schedules. Lots of you have colossal tax returns that may be, Brad, what do you have the biggest ones? 100, 200 pages, probably? Yeah, you got to provide every single return, all schedules, not just, the top 2 pages, which is common, or the top 5 or 6 pages, everything. Schedule liabilities, you don't use that in traditional lending. We use a debt schedule that's your own form, which you can still use. My advice to you, use their form. Don't leave any guesswork. Use exactly their form. Sign and date it. Make sure you fill in every box. And then the personal financial statement, form 413, I can tell you in my experience with customers, if I can think about the last 5 years, only once has it ever been filled in fully and completely and accurately by one really brilliant person. And this is where I spend a lot of time with my customers. So that video, I hope, will be very helpful for you. You've got to remember who needs to be on the form. Who's on the form is who's on your personal tax return. So if you have a spouse, partner, wife, husband, you have to put them on there. So Brad, for example, if a customer has 100% ownership of her company, if she files her personal tax return with someone else, that person must be on the personal financial statement. They have to sign it. okay? The other thing you want to avoid is using round figures. Time and time again, oh yeah, I have $1,000 in my checking account. No, if the last statement said $999.99, that's the number. Well, actually you omit cents. You just be $999 and that's the number. Because what does it show? It shows that you were prepared to be very detailed and thorough with your preparation. Okay, next. Okay, here are some additional underwriting insights, and this is a repeat of earlier. If you haven't filed 2019, underwriting in this loan program starts with 2018. So tell me which is better for you. If your 2019 shows increased revenue and profitability, please file the tax return. Even if you're under extension, forget the extension, file it. That's the relevant tax return for underwriting. If 18 was higher and had more profitability, use 18. If neither of them showed profitability, my recommendation is keep 18, show year-end 19, and hopefully you can show on a projections basis or in 2020 that you were profitable, okay? So that's why I'm suggesting, how do your individual months look in 2020? Underwriting goes on a 90-day window, right? So now here we are, March 30th, right, Brad? So interim statements in all traditional banking start to get asked for immediately on April 1st. Okay, they start asking what happened in January, right? So this is why kind of the time is now, because if you didn't have any economic injury until March and January was still banging for you, then there you go. That's how you present your best foot forward, right? So a key insight here, which is I had really extensive chats with my SBA contacts on this. And one of the forms that's kind of ignored and not considered too important, but it is critical, is Form 1368. Okay, so many of you have probably submitted it and maybe you've seen it in your package. That little phrase in the box down there is on both sides. And it says, please submit any additional narrative or financial information you feel will help establish your economic loss. All right, what does that mean? On the flip side of that document, it does show you a chart, and we can go on to the next slide, that you need to fill out saying, hey, what's the period going forward? What's this gonna look like to me? And one of the big questions is, what are you going to put for net profit? Because if you're showing 12 months into the future, hey, I'm going to lose a lot of money because of X, Y, Z, how will that affect your ability to prove payback and say that you can afford to pay back a loan? So you need to be really careful and cautious about how you fill that out and think about your cash requirements. And again, that's another reason to work with Brad or your team members at Accountfully to be very thoughtful on how you do your cash flow projections. Here's a big insight for you. And again, I didn't expect this. This is kind of new to me. But the narrative, right? The narrative, here we go, another phrase inside quotation marks. It's really your opportunity to make your case. Remember I talked about earlier, you can see down there, this is your chance like you're applying to your first choice college. Think of this as your college admissions essay. This is where you really need to detail your economic injury and justify it, right? So now you're gonna do it in numbers and you're gonna do it in a bit of prose. And be precise. I'm recommending to all my clients, just do it on one page, but be very concise and make sure you state the case succinctly, right? The other thing I'm asking you to do here is make your ask about how much money you're looking for in the EIDL and how you can justify it. To my knowledge, and I believe I'm right, there's no other place on that application to say how much you're asking for and why, okay? This is your opportunity to ask for it. And again, if you're profitable and you can prove it, and you can afford based on the profitability of your business, this is where you make your case. Wouldn't you rather control the conversation about how much you're asking for and why, rather than letting someone at the SBA determine that for you, okay? Especially if you're equipped with the right knowledge and you have your financials up to date. And that's how I'm helping people a lot. And, and working with your accountant, we'll get that sorted out for you too. I would like you to add something on your company story, your founding story, maybe links to your website. You want these people to know you. Again, this is about you protecting jobs. So why wouldn't you want the person reading this application to get a good feeling about who you are? Are you a good operator? Your employees? Again, don't be too effusive, but if you can do it all on one page and be complete, I think this is something to recommend. And I'm preparing something, I'm still editing it because based on current information about what I think are all the key elements you can include in your narrative. All right. Okay, let's go on to the next one. Okay, so what happens after you submit? And again, this is the latest and greatest from my SBA contacts here in South Florida. This is the current process. Again, if it changes, we'll let you know, right? So application gets assigned to a loan processor. They check it out. If it's fully complete, great. If it's not, comes back to you saying, hey, this wasn't signed, or I need a 4506, whatever it is, respond right away. Please don't delay in doing that. They check for eligibility. Almost all of you are going to be eligible. They'll set up an interview for you. So any of you who've been through bank lending of any type know that you have what's called the underwriting call. And same circumstance here. You have to be prepared for that. And they'll reach out to you up to 3 times. So even if you're like me and you don't answer the phone for numbers that you don't know anything about or where they came from, just please keep checking your messages, because they might call multiple times in the same day and you don't want to miss that opportunity. My strong recommendation to you is stick to your application, stick to the numbers and any narrative you might have submitted. If you are approved, and I really hope all of you are for the money that you're looking for, a case manager gets assigned and you'll need to say, hey, I'm going to accept that money and I'm willing to sign. Okay, and I'm willing to pledge my collateral if needed. I'm willing to give a personal guarantee. And an important note is if you applied for a large amount, say you applied for 200,000, but hey, I need 100,000. It's less than I expect, you can do that. The loan docs get sent to you. And then this is the part which I heard, and I don't know if I believe it's still true, but again, I'll reconfirm, you get disbursement in tranches, that you don't necessarily get all the money at closing, that would happen over 3 or 4 times. And then there's a grace period before the first payment is due. Okay. What I would strongly suggest to you is don't just take it from me. If you're moving through this process, once you get assigned to a loan processor, maybe you can use this slide as a reference point. Say, hey, I heard the process is this. Is this still true? Is there something different? They're there to help and they're going to have all the latest information. So that's my strong recommendation to you. Just stay very engaged with the people who are looking to help you. Okay, next.
One question is around the EIDL application, Keith, in relation to those folks who already submitted the application a few weeks ago on the SBA website. What is the best course of action, number one, to edit that loan if they need to, as well as question, would all of those forms, one person mentioned that there was no narrative section, or I think it was 1368 or whatever. In short, how do they go and edit that application if they already have it?
Yeah, I mean, what I'm told so far is that don't restart what you already did, but submit just what is new, right? Don't restart the whole application. If you, again, in the perfect example is the 1368, right, Brad? So that's where you're going to have that opportunity to put that one additional sheet that's the narrative. What you can say, and what the advice I was given is, hey, as a result of being in training and reading more and hearing more about this, I found out that I really should advise you on some additional information that makes sense for your consideration of my loan. I want to tell you a bit more about my company and how this is helping me, things like that.
And
right?
in that way, is Keith, how do they get a hold of the SBA, or how do they do that now if they already have a loan?
The prior slides, you saw, I think was it a disaster assistance?
Right there. Disaster customer assistance at SBA.gov.
Disaster customer service at SBA.gov. There it is, right?
Perfect.
You should know who your loan person is, and you should know your case number. So again, put that in the subject line or put it somewhere in the body, and just stay in touch, right? These people want to help. So, it's really just you maintaining good communication.
Awesome.
Okay. Okay. That was helpful, and we'll keep coming back. All right.
And right. Keith, it's 5 to 2 right now, or 5 minutes ago. Are you good if we go over, Keith, in terms of your time?
Sure, of course.
Okay.
But we're almost finished, all right? So,
yeah, exactly. We had a couple more, but I just wanted to make sure.
Yeah, we're almost there, guys and ladies and gentlemen. So tying this all together, here you go, right? This is kind of the summary of what I'm telling you to do right now, or I'm inviting you to do. Get everything together, your documents being up to date, accurate, and complete, right? I can't stress enough all of those on their own, up to date, accurate, and complete, right? You don't want to leave anything to imagination of someone on the other end to say, wait a minute, why is that number negative? Wait a minute, why are they a 0 there? And remember, these are still loans. You have to be creditworthy and you have an ability to pay back. We talked about that. Remember, these are loans that will go on your debt schedule. So remember, Brad, you talked about, hey, for a lot of you, this is a short-term fix, but don't sacrifice the long-term for this, right? So if you're getting particularly an EIDL loan, it could be up to 30 years, it could be 20, it could be 10. When you think about successive rounds of financing, particularly debt, you have to think about how that might affect your future asks. I've never say don't do it, but just think about that as you look on future lending, right? Again, accurate, complete, and fully documented, right? Everything you can verify and tie back to a specific number is good. More is more. This is again about saving jobs. This is not about growth or business expansion. You can use other SBA products or other financing for those purposes. Again, there it is, economic injury. Here it is, right? I keep using that symbol, and I hope you're not bored of it just yet. But it's a vague term, and you have to define what that means for you. Timing is everything. What I mean timing is everything. So if the first couple of months of 2020 were amazing, you had great results, but March really is horrible, apply now, right? Because the relevant period for looking at your interim financials is only just creeping into January. Okay? And then there are still many unknowns. And I hope we've tried to tell you, we've given you our best advice, given you our best information, our best interpretation, but there's still some undefined terms, criteria, and funding dates. So I'm inviting you to stay informed on a daily basis, right? Remember, you have two places to go. Your SBA lender or your SBA that you submitted to, that's who you want to be in touch with, and your commercial banker, okay? Stay in touch with both of them as frequently as you can. And then I think we have next step.
Yeah, I guess a couple other kind of summary items in this. Again, like we're getting a lot of questions here related to, if I'm not profitable, can I even apply for loans? Specific things. If I just started, can I apply for loans? Remember, these loans are a result of the current situation at hand, and they are about saving jobs, and they're about economic injury being shown as a result of this. So this is very similar before this pandemic situation arose. When you try to go get a bank loan, when they look at, can you repay the loan? You have to think of it in that mindset. And then you may have to go to other options of raising money, which a lot of you have had, right? Equity funding, friends and family loans, credit cards, etc. are on the way, right? This is not going to be a solution for everybody. The goal here is, again, to stop the bleeding, keep jobs, and then help those people that are directly impacted from the situation at hand. And it's about you to, you and your company to help position your company to present why economic injury was shown, and then how you can pay back these loans. Again, if the loan is forgiven as a result of the PPP, great. But what if it's not forgiven? You still need to pay it back, and you still need to show how you can pay that back.
Yeah, brilliant. Mm-hmm. And again, all those other options Brad started to list off, they're still available to you, right? All those are other sources of funding for your business, whether they're short-term or they're long-term options. Some of them went away, like in conventional lending and what banks are doing, but a larger variety of them are still here for you. So this is just two more things to add to the mix when you're looking at your overall financing strategy moving forward.
Yeah, and Keith and K2 and Accountfully did a webinar probably 3 months ago on just overall debt financing before the coronavirus pandemic that kind of highlights essentially the availabilities of raising money, equity, leveraging, getting debt financing. When can you do that? And after this call, we will send out like a recap of the recording. I'll also include that recording as well, so that you can, everybody on this call can kind of leverage that and understanding kind of their opportunities at hand as well. And I guess this is kind of the final slide. Next steps, I guess at the end of the day, essentially a couple of things here. How Accountfully can help our current clients as well as clients on this call who are our clients is essentially we can help you in gathering the requested documents, getting your financial statements cleaned up through 2020, helping to getting all your tax returns done from 2018, 2019, etc. Looking at the specific profitability of the years and what makes sense, helping with the cash flow forecast. Again, a lot of this is around how to pay back your money, right? How to pay back these funds. Well, the 12-month cash flow forecast can help. Additionally, the PPP loans that are based upon the payroll expenses the last 2.5 months or whatever, again, there's more guidance on that, but if you're a client of ours or not, we can help you gather those documents in preparation for this. Obviously, our current clients that are clients of Accountfully and or starting soon, you have a jump start, talk to your client team. If you're an existing contact team member, we are going to have a lot more information how we can help support you in this moving forward, but we are here to help you getting these loan applications in place, but a lot of that around is ensuring we have the proper package in place, and then we can leverage and work with you moving forward.
That's it. And Brad, we're perfectly synergistic, right? Because I would take all that information you prepare and then kind of apply my insights and my knowledge of what it takes to qualify for all these different types of lending. and kind of provide that underwriter and analytical viewpoint to say, you know, what I'm advising all my clients on now is what funding you would qualify for and why, and how do you prove it, right? So Brad and I went through this earlier, and you know, you just can't, it's hard to remember that these are all the types of debt financing that are available to you, all that big list there. And in these extraordinary times, because of where debt may go, who might lend, who might not lend, I'm encouraging you to think again about what you can do, your friends and family, your investors, other private sources. FinTech is so much more evolved than it ever has been. And even if you're raising equity or you need to go back to your original equity partners, all of that needs to be on the table in your financing strategy more than ever. And that's the way I'm advising my clients right now.
Yeah, and I think the other thing I'll say with that is this kind of goes back again is it's hard to ask a banker for an umbrella on a rainy day, right? Like this is a very dire time, but if we all had this in order 3, 4, 5, 6, 10, 12 months ago, you may be better prepared in this. With this being said, we all are in this extreme situation. We need to help work together and figure out how to do this moving forward. But as we move forward, always continually think about how you can better position yourself to get money, to identify, to get loans, having all your information updated to understand when you can go and take advantage of these types of situations.
Absolutely.
So outside of that, you know, you have the information, and essentially once we get everything in place and package in place, Keith can then help provide a kind of an eligibility review in terms of understanding like what the amount to ask for, how to help you fill out the documents, ensuring what type of loan or what you can apply for. So some of the folks that have the questions around, if I'm not profitable, can I get this? Well, it depends, right? It all depends upon what's going on, and there's different programs for each, you know, specific, you know, business situation that is at hand. So. Here's Keith's information. K2 Financing is his website. That's his email right there. Again, if you're an Accountfully client, it'd be good to go through Accountfully. If you don't have anything in order or your books and records squared away, Keith's going to redirect you right back to Accountfully if you're on this webinar. So it'd be good to kind of reach out. You can reach out to me at hello@accountfully.com or go to our website and do the getting started form. Outside of this, there's a ton of questions in the chat box, and we really appreciate everybody kind of being very engaged in this. Obviously, because of time restrictions, we're not going to be able to answer those. But I'm going to follow up with Keith after this, and we'll either provide a follow-up webinar where him and I just go through questions and answer some of these live and then share it again with you and or document them in a document, because at the end of the day, I know a lot of you had the same questions around a lot of these current situations. Again, this is a very dynamic conversation, dynamic rules and guidance that's being provided. So we're going to keep trying to stay up on this, but our promise to you is we'll keep you engaged as much as we can as moving forward because of all the dynamic situation that exists. So anything else, Keith?
That's it. Just we're all here to be of service and do the very best we can. It's forcing you to take a future view, and just the more prepared you are, the more you can document, the more you can be certain about accuracy, completion of your documents. This is what you really need to be doing now. Okay. Mm-hmm. And then from that, with a great complete package, we'll help you figure out what's the best path for you.
Thanks, Keith. Really appreciate the time, and we'll all be in touch. Have a good day.
Hey, all the best, everyone.